But what if I told you that 100 is enough to begin building real wealth? You don't need thousands of dollars to get started. You don't need to be a finance expert. And you definitely don't need to wait for the perfect time. You can start with $100. Now, let's be clear. Will $100 make you rich overnight? No, but it can do something far more important. It can build the habit of investing. And wealth is built from habits, not hype. In this video, I'll show you exactly how to start investing with $100 step by step, in a way that's simple, realistic, and beginner-friendly. Stay with me until the end, because I'll also explain the biggest mistake people make when investing small amounts. First, reset your expectations. When you're investing 100, your goal is not massive short-term returns. Your goal is learning, discipline, and long-term growth. Step 1 is choosing the right platform. You need a brokerage account that allows fractional shares. Fractional shares mean you don't have to buy an entire stock. If company's stock costs $300, you don't need $300. You can invest $25, $50, or any amount your platform allows. When choosing a brokerage, look for 3 things: low or zero commission fees, regulation and security, a simple interface for beginners. Once your account is set up, step 2 is deciding what to invest in. This is where most beginners go wrong. They pick one trending stock they saw online and put all their money into it. That's not investing. That's speculation. With $100, simplicity is your advantage. Instead of buying one company, consider a broad market index fund or ETF. An index fund or ETF tracks a large group of companies, sometimes hundreds of them. So instead of betting on one business, you spread your investment across the market. This gives you diversification. Historically, broad market indexes have grown over long periods of time, although markets do go up and down in the short term. That volatility is normal. If you want a very simple approach, you could invest the full $100 into one diversified ETF and leave it there long term. Another approach is splitting it. For example, you might put $70 into a broad market ETF and $30 into a large established company you believe in. That way, you stay diversified, but also learn how individual stocks move. But avoid overcomplicating things. With small capital, clarity beats complexity. Now let's talk about time horizon. If you need this $100 next month, it should not be in the stock market. Investing is for money you can leave untouched for years. The longer your money stays invested, the more compounding can work in your favor. Compounding means your investment earns returns, and then those returns start earning returns. Even small amounts, when invested consistently over time, can grow in meaningful ways. And this brings us to something important. Your first $100 should not be your last. Think of it as your starting point. If you invest $100 once, that's good. If you invest $100 regularly, monthly or consistently, that's powerful. Consistency matters more than the size of your first deposit. Now let's cover what you should avoid. Don't chase viral stock tips. Don't try to double your money quickly in risky penny stocks. And don't panic if the market drops next week. Short-term movement is noise. Long-term direction is what matters. Also, before investing, make sure you're financially stable. If you have high-interest debt, focus on that first. If you don't have any emergency savings at all, consider building a small buffer. Investing works best when it's part of a balanced financial plan. Now here's the mindset shift most beginners miss. When you invest, even $100, you stop being just a consumer. You become an owner. You start thinking long-term. You start understanding how businesses grow. You shift from spending money to building assets. And that psychological shift is powerful. Wealth is rarely built from one big move. It's built from small, consistent decisions repeated over time. So if you've been waiting for the right moment, this is it. Start small. Start smart. Focus on the process, not quick results. Because the first 100 isn't about getting rich. It's about planting a seed. And the earlier you plant it, the more time it has to grow. In the next video, I'll break down the best beginner investment options to consider in 2026 and the common mistakes that quietly destroy long-term returns. Stay with this channel if you want clear, structured guidance on building wealth step by step.